This is a company that I didn't see the turnaround here, and this is Rolfes, which is a company which manufactures a bit but does quite a lot of buying in and distribution of chemical products. It shifted its business from some funny sectors and is now a bit more focused on agriculture, water and food industries. The market cap though has rocketed to just shy of R1 billion, 939 million. Price earnings ratio is still cheap though, 10.9, dividend yield of 1.38%. 5-year share chart, let's get it up so we can see what we mean. Didn't do so well in the past, but doing nicely now.
Yes, and I've been a shareholder even before that graph, and
well
I saw it go all the way up and all the way down and up again. So it's been quite a roller coaster ride. And in the time, the business has changed a bit. Obviously, Lizette Lynch came in and she's done a very good job in terms of getting the portfolio.
Where did she come from? What was she?
She was the CFO, so she was with the company in a more financial capacity.
That used to run it, because this company, does it still belong to Arnold Fourie?
Yeah, well, he's still got a significant stake in the business.
He's
and
the
he was
guy
chairman.
from Pinnacle.
Correct.
That's his business really, and then he had this as a sort of a side family investment.
Yes, and at the time you might remember that Pinnacle had these issues of bribery and all the dark clouds hanging around them, and that seems to have affected the Rolfes share price as well.
Yeah,
and when that cloud lifted, you saw the Pinnacle share price do very well, and lo and behold, the Rolfes share price as well. So it's been a nice turnaround, and the business is a bit different now. Correct.
Well, how is it different?
So Adard was called an M&A guy. He looked to have a platform and build on that platform by doing M&A. Your share price needs to work with you when you do M&A. The share price didn't. They needed to reset the business. Some of the businesses, whether it was in silica or chemicals that had more lead in, were giving off cash but really weren't growing. And they needed to shift that, and they have done that specifically with the Bregan acquisition. So a very good core chemicals business to focus on. Plus, you had a BE partner buying a significant stake in the company, which also means that when people buy their chemicals, other companies, they get BE points by buying them from Rolfes. So two very good points to improve the competitive situation of Rolfes.
And just sequentially growing, but now we're going to run out of time, so we're going to have to go hot or not. It still looks cheap, notwithstanding the big share price moves.
Exactly,
so
it was ridiculously cheap. I still see it's relatively cheap, so I would say hot.
Hot, and this one is now penetrating that 1 billion market cap level, which is a good thing because it shows scale and size and starts getting onto the radar screen of more institutional investors.